Key Bar Rule Series. Community property.
Presumptions. California is a community property state. Community property, CP, is all property, real or personal, wherever situated, acquired by a married couple while domiciled in California. Separate property, SP, is all property acquired before marriage, during marriage by gift or inheritance, or after the end of the marital economic community, and all rents, issues, and profits of such SP. The presumption of CP may be rebutted by tracing, title, or transmutation. End of the marital economic community. The MEC ends when the couple lives separately and apart, and at least one party has no intent to reconcile. Tracing. A change in the form does not change an asset's character. Where SP funds are used to purchase property during the marriage, the property remains SP. Where CP funds are used to purchase property taken in one spouse's name, the property remains CP, unless the form of title is evidence of an intent of a gift to the spouse. Transmutation. Spouses may agree to alter the character of property. SP to CP, or CP to SP. To be valid, the agreement must 1. Be in writing, 2. With an express declaration of the ownership change, and 3. Signed by the spouse giving up their rights. Premarital agreement. Prior to marriage, a couple may agree to alter the community property presumptions. Under bonds. To be enforceable, the agreement must be in a signed writing, voluntary, and not unconscionable. To be voluntary, the parties must be 1. Given at least 7 days to review. 2. The opportunity for independent legal counsel. 3. Written disclosures. And 4. In a manner free from duress. The disclosures must reveal the full extent of the property. SP increased by CP. SP business gains. When a SP business gains in value during the marriage, the benefit to the CP depends on the contribution of the SP spouse. If the gain was due to the spouse's skill, this skill is considered a CP contribution. The SP gets a reasonable rate of return, but any additional growth is credited to the community. Pereira approach. On the other hand, if the growth occurs due to general economic conditions rather than the spouse's efforts, the community is reimbursed for any unpaid salary to the spouse and the remaining increase goes to the SP. Van Camp approach. Moore, Marsden. Under Moore, Marsden, if CP funds are used to pay down the mortgage on a SP home, the community gains an ownership interest in the home, based on the amount of principal paid. Management. Fiduciary duty. Each spouse owes the other a duty of good faith and fair dealing, including disclosure of all material facts and transactions made with community assets. Disposition. At death. At death, the surviving spouse keeps their half of the CP. The decedent spouse may dispose of their half of the CP and all of their SP through a will. If the decedent spouse dies intestate, the surviving spouse gets all of the CP, and the SP is distributed by the rules of intestate succession. At dissolution. At dissolution, CP and QCP must be divided equally between the spouses. The court does not need to divide every property into equal halves, but may allocate property to achieve a balanced division of value. Taking against the will. In California, as a CP state, there is no elective share option. However, if the decedent spouse disposes of the entire CP, the surviving spouse may enforce their CP interest, in lieu of any gift in the will.